This is David Tepper, the billionaire hedge fund manager who started Appaloosa Management in 1993 and turned it into a billion-dollar empire extremely quickly. For reference, they started with $57 million in assets under management, and by 2010, they had $14 billion in assets under management, which is just a crazy quick growth. And in this video, what we're going to do is we're going to break down the strategy that he used to build this empire, which is essentially a crisis investing strategy. And in addition to that, we are also going to look at what he is currently holding in his investments as of 2024. So let's break it down. So as I said, the strategy that Tepper used to build this empire can basically be described as a crisis investing strategy, meaning in times of crisis, economic collapse, banking collapse, etc., he looks to come in, find assets that are extremely undervalued and bet big, and just essentially try to buy them when they're dirt cheap. And this is essentially the strategy that he has rinsed and repeat year after year as all sorts of events have transpired, and he has capitalized absolutely massively in the process. So the best way I've heard this described is if there isn't a $20 bill on the floor, Appaloosa Management is not interested. In other words, if we can't buy it for dirt cheap, we're not interested. And this is essentially the motto of Appaloosa Capital. They want to buy bonds, assets, when they are extremely undervalued. So let's look at some examples and really break it down. So the first example comes in 1998 when the Bank of Russia defaulted on their debt. Now, of course, there was a lot of panic in the market, but Tepper saw an opportunity, and that opportunity was to start buying Russian bonds for very cheap. And at first, it didn't really work out so well. He had a lot of unrealized losses, but he trusted his thesis, he held strong. I believe he bought more and more Russian bonds, and ultimately, he ended up having a fantastic gain from this opportunity. And it's reported that he purchased these Russian bonds for 16 cents on the dollar and sold them for 40 cents on the dollar for obviously a huge gain. So this is example number one. So another example comes in 2001 when Tepper saw an opportunity. And this opportunity was when a number of companies were facing bankruptcy, such as Enron, WorldCom, and a number of others.
The Wall Street Journal is reporting that telecommunications giant WorldCom may declare bankruptcy tonight. The company's board of directors has been meeting all day. It would be the biggest bankruptcy filing in history. The company is more than $30 billion in debt and is reeling from an accounting scandal.
And basically, when the markets were panicking, the stock looked like it was going to zero. Tepper came in and he started to purchase these bonds and stocks for ridiculously cheap. And basically, he held these for a while, and this led to a massive gain in 2003, one of his biggest years, 148% gain. And again, he's just capitalizing off fear, off crisis, off panic. He's coming in, he's remaining clear-headed and purchasing these super cheap assets. The final example comes from the 2008 financial crisis when the markets were just completely panicking. There was panic selling.
The phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion.
What did Tepper do? He remained logical and he started to aggressively purchase distressed debt and distressed stocks, in particular banking stocks. And it's reported that he purchased Bank of America for $3 a share, Citigroup for less than $1 a share, when there was just complete market panic. And essentially he bought them for dirt cheap. But the question is, how could he be so confident? How could he aggressively purchase these stocks when people are thinking they're done? They're going to be complete collapse.
Paper? In March. It was a treasury paper.
Yeah.
You can't put out a paper and say you're going to buy securities and not buy them. Even the government has to be subject to the laws. So they told me they were going to buy Bank of America at a 6 handle. They told me where they were going to buy other stocks. Nobody believed them. The market kept going down. We actually did. So what we did is we didn't buy just stocks. We bought bonds. So we bought, bonds and preferred, at 12 cents on a dollar, 15 cents on a dollar, 20 cents on a dollar. And, stuff went up.
But couldn't it have been a situation where some of
Well, he did his research. He trusted his thesis. He knew that the US government would bail out these companies, that the US government would step in and they'd start to stimulate the economy. And that's exactly what they did. And as a result, Tepper and Appaloosa Management profited absolutely massively in the aftermath. It's reported that they made $7 billion from these companies, from this crisis. And in fact, Tepper himself reportedly made $4 billion off of this. So just an amazing payday, huge profits off of, once again, remaining logical and aggressively purchasing stocks and bonds when the markets are panicking.
There's a lesson here. In life, get all the experience you can. While you're young, go for the experience versus a paycheck. That kind of experience got me a job at a mutual fund specializing in distressed companies, and eventually in the door of Goldman Sachs.
So what lessons can we take away from David Tepper? Well, lesson number one is to look for asymmetric investments. As he has said, when you have all of this upside, it presents huge opportunities. And that's essentially exactly what they do. They look for these investments where they're purchasing something for dirt cheap, extremely undervalued. So essentially their upside is huge and their downside is minimized. Lesson number two is the importance of fundamental analysis. Tepper is a master at reading the financials and understanding that certain companies are extremely undervalued. Perhaps their assets are not actually so bad. They are just going through a certain crisis. And this is where Tepper stands out. He can recognize the gems, the companies that are actually worth something, but extremely undervalued.
Investors.
Either way.
For me, probably like a 40%.
What about for
and
your
for my investors, like
Yeah.
30%.
I mean, David, we are talking now about not being able to do 5% for pension plans. Like, not people are accepting 2.5% just to get their money back in 10 years.
Yeah.
How do you do 40? How many years is that 40%?
17 years.
Lesson number three is to analyze with logic, not analyze with fear. Again, this is something that Tepper is just a master at. When the markets are panicking, when everything is collapsing, he analyzes with logic and he takes the necessary action to purchase a stock, to purchase some debt, whatever it might be. When everyone else is panicking, he's a contrarian. And this is again where Tepper stands out. Lesson number four is to trust your analysis. There's so many articles, so much information. When the market is panicking, you just simply need to trust your own analysis, trust your own thesis, and that's it. If you don't do that, you're really going to struggle with trading and investing. And this is what Tepper says. He says, don't listen to all the crap. Because that's the truth. There's so much crap coming from articles, the news, etc. You just need to do your own analysis and trust that analysis. Lesson number five is that you need to be willing to take on risk. Of course, you need good risk management, but if you want to win big, you've also got to risk big. And this is something that Tepper was pretty good at. When an opportunity came, he was willing to put the dollars down. He was willing to take the risk. And sometimes you just have to take the risk. Of course, strong risk management is always key, but when the opportunity arises, when your analysis is being met, you must be able to take the risk. Otherwise, you're never going to win. So finally, what is Tepper invested in right now as of 2024? Well, let's have a look at his most recent 13F filing and see exactly what Appaloosa Management are invested in right now. So the first thing to note from the 13F filing is that the top 5 holdings of Tepper are Alibaba, Amazon, Microsoft, Meta, and Google. And interestingly, he holds 10.5 million shares of Alibaba, and it makes up a huge percentage of their portfolio. So obviously, Tepper sees a huge opportunity in Alibaba. And if you know anything about Alibaba, you will know that it has been tanking over the last few years. Very aggressively been dropping. And the stock price is, I think it was once at $300 a share, and it's now around $100 per share. So obviously, Tepper sees a huge opportunity in Alibaba. And hence why I assume it makes up such a large percentage of the portfolio. Now, the one thing to note on all of these top 5 holdings he has is that he's actually reducing the position sizing in all of them. For example, he's recently reduced his position in Alibaba by 6%, reduced his position in Meta by 16%, Google by 7%, etc. So another thing to note is that he's purchased a huge amount of the stock Lyft, which seems like quite a unique investment, where he's purchased 7.5 million shares, which is just a huge amount of stock. And I believe that makes up 1 to 2% of the actual market cap. So that's obviously a huge purchase, a huge investment that has recently taken place. So again, he must see a huge opportunity in Lyft. And as we know with Tepper, he's looking to buy assets for cheap. So he must believe that stocks such as Alibaba and Lyft are essentially looking very cheap, they're very undervalued, and he's looking to capitalize massively on these stocks. Anyways, that concludes the video. Thank you very much for watching.